Joining us right now to talk about that and the market's reaction is Stephanie Ling. She's Hightower Chief Investment Officer, also a CNBC contributor. And boy, Stephanie, we are in a different position today than we were a week ago. Just looking at the market's reaction last week, really strong upside. Best week of the year for both the S&P 500 and the NASDAQ. Is it justified? Is it warranted?
Well, September is living up to its reputation as being volatile. I mean, just 2 weeks ago, we were down 4%. So to recover last week was really encouraging. And I do think it's tied to the fact that we had a couple of good inflation prints last week. We had initial claims, to me, was the most important because it was tame. It is rising for sure, but the 4-week moving average is still very contained at about 240,000. The 4-week moving average. If you look and you go back to recessionary periods, that number gets as high as 375,000. So that's why that number was so important to me last week. And of course, then you got the whispers of 50 basis points. Becky, I don't know. None of us know if they're going to go 25 or 50. But I think the point is we are about to embrace a cutting cycle. And that is positive for the long term, especially for risk assets, especially since we are growing at 2 to 2.5%. We're not in a recession. So we are in a position of strength. And I think when you lower interest rates, that is going to be very positive for not only risk assets, but also for the housing market. Last week, mortgage rates hit the lowest point since February of 2023. And we haven't really even begun to see that pent-up demand. I think if you get mortgage rates below 6, I think you will. And that's going to be a multiplier effect for the overall economy as well, and a positive in my view.
The last week, you had NVIDIA that really turned things around after those comments from Jensen Huang. That seems to be a crazy momentum factor. Just any given day, you can feel one way about that stock or another, and that's led to a lot of the volatility, too. What did you think of his comments?
Yeah, well, last week we had a lot of different comments from companies because it's conference season. So that's the good news. Companies are on the front line, right, of the economy. So that's why we care so much. But yeah, NVIDIA certainly helped propel the momentum trade. But it was also Broadcom. It was Lam Research. We had Oracle report earnings and then raise their guidance at their analyst day. That was really positive. So tech is kind of alive and well and certainly helped the overall market. But I will tell you, the Barclays Banking Conference also was very positive from a lot of companies. Bank of America, American Express, Morgan Stanley, Truist, even J.P. Morgan, which was kind of guiding a little cautiously for 2025, they typically do. All of these companies had very positive things to say about the consumer. And I think that was really great in terms of the confidence. And in addition, delinquencies are stabilizing at 2%. They were at 2.5% in 2019. So people that get nervous about credit card companies, delinquency rates, charge-offs, and that sort of thing, they really shouldn't be, at least according to these companies, which I thought was really very positive. And oh, by the way, Basel III Endgame, if we do get a new rule of 9% capital instead of 19, you're going to see a lot of buybacks in the bank sector. So I like that sector very much.
Stephanie, concerns about charge-offs, the strength of the consumer. If the Fed does cut 50 basis points, does everybody say, wait a second, what do they know that we don't? Is there something larger lurking out there?
I don't think so, Becky, because I think on the consumer front, as long as the job market is kind of balanced, and that's what I would say it is right now. It's not tight like it was, but it's balanced. And we have wage growth, though, at about 4.5%. And so if you have jobs and you have wages, oh, by the way, if you switch a job, you're getting 7% wage growth. So, I think the consumer is in okay shape. And by the way, U.S. household net worth is actually at record highs because of the equity markets, but also because of home prices. So I think the consumer is, not all the consumer is doing well, but I think for the most part, they're okay and they're hanging in there. And of course, we know that 70% of the economy, so it's super important. I don't think the Fed, if they go 50, knows anything. I think they just think, they can go 50 because it's restrictive.
If you're feeling pretty positive about things, and it certainly sounds like you are, what are you buying?
Yeah. So, well, I added to Broadcom twice last week after I heard, it was after the quarter when the stock fell 10% to 2 Fridays ago. And then on Monday, I started adding to it. AI, obviously, we all know it's very strong for them. They're the number 2 player, and that's going to be up threefold this year from last year. VMware, the acquisition is doing very well. It's a $4 billion revenue run rate. Gross margins are best in class at 77.4%. I'm also buying some consumer. I like Chipotle. I have never owned it before, but it's down 30% since Brian Niccol has left. I think they have a very deep bench. I think the numbers have been de-risked in terms of same-store sales, growing about 6%. Gross margins, we know, are going to be under a little bit of pressure. They're not taking as much price, but they are still going to deliver double-digit earnings. And they have a $1 billion buyback. And then I started buying CrowdStrike when it fell as well, down about 30% from its high. This is the number 1 company, best in class, growing 40% earnings and 32% revenue growth. So
and you don't
I think
worry,
there's things to buy, Becky.
You don't worry about lawsuits that are out there from Delta and potentially beyond?
I don't. Their retention rate in their quarter was 98%. And they also had their recurring revenue was running about 10.9%, net new annualized recurring revenue, about 10.9%. Expectations were for 5%. So they are doing well. It's not, without some risk, of course, but I think being down so much, the stock has gone from 22 times EV to sales down to 12 times. So I think a lot of bad news is priced in. So my point being is, I'm not buying so much yet last week because the market was up. It's on the bad weeks when you want to be taking advantage of just best-in-class companies that are on sale.